Hello and welcome. You're watching Countdown right here on BloombergQuint Live. It's a quiet day for the equity markets, but the banks are still facing the brunt of the selling pressure. Nifty Bank's down almost 2%. Before we run you through all the market commentary, let's run you through the headlines. Markets headed for a lower close after a positive start the trading day. Both the Sensex and the Nifty come off the day's highs. Banks remain the hardest hit. Global markets trade cautious as the spread of coronavirus continues. Europe opens higher as the EU enforces a systematic shutdown. Asian indices end on a mixed note, reacting to the crash in the US equity markets. Moody's Investor Service lowers India's GDP growth forecast to 5.3% in 2020 due to the impact of the coronavirus on the economy. For 2021, Moody's expects India to grow at 5.8%. And coronavirus cases continue to rise in India, with the number crossing 120. Fresh cases registered in J&K, Telangana, Kerala and Maharashtra. The death toll stands at 3. Good afternoon, Neeraj. It is a quiet day if you just look at the fine print right now, but if you were to dive deeper into the entire day's trade, you'll see the kind of volatility that we've mapped.
Yeah, and we saw some glimpses of that in the SGX Nifty trade before our market started as well. But I think the volatility is what I was talking about. Look at this, how this day is shaped up, and it's more pronounced in the Nifty Bank, by the way. But look at the Nifty, flat, but the up moves and the gyrations. Look at the Nifty Bank, went down, came into the green, in the red, again in the green, and right now trading in or around the lowest point of the day, down about 2 percentage points. That's about 500 points lost for the Nifty Bank on a day when the indices were looking to be stable. So it's not turned out to be a happy hunting ground. And by the way, the world markets too have come off a little bit. Just before we get to our markets, if we can just show what the FTSE and the CAC intradays have done. This is this is today's day and the fall that we're seeing in this, and as well as if you look at the FTSE too, these indices have come off from the high point of the day and currently trading lower. So Europe is not having a great day either in trade, and probably that is reflecting too. The Dow futures were up and active when we started off the trade. They would have been different now. About 0.25% higher for the DAX, and the Dow futures just about 300 points higher. They were up and active when we started trade today. But the heat map on the screen for the Nifty 50, and that will show you how our markets are doing. We started off with a fair degree of green, then even Stevens on the red and the green. For now to even Stevens, but the cracks that have appeared have been pretty steep. So Z is 15% lower, but Bharti Infra, which was ideally insulated of sorts, is down about 8%. IndusInd Bank continues to grind lower, but the Bajaj twins, and they are starting to see some pain now, despite the management saying that things are okay with Bajaj Finance, and insurance should actually be a net beneficiary, but FinServ and Finance are correcting. ICICI Bank has lost another 5.5%. HDFC Bank is correcting, HDFC is correcting, Kotak Bank is correcting, and which is why the Nifty Bank is the key culprit in the session today. What is doing well? Well, Yes Bank is in some other orbit really, 55%. When did you last see a stock in this turmoil gain so much? I think Yes Bank at the last 5 days would be the best performing stock across the world, save for maybe Zoom, because Zoom in US is doing well. But some of the others like HUL, Hero MotoCorp, etc. too are doing well. And Devina, I know you're talking about Asian Paints a lot yesterday and this morning. That one has recovered really smartly.
Yeah, yesterday was down about 5% and today is up 5%. So there is a smart bounce coming back. And look at consumer names. HUL is up about 6%. Now that is also a heavyweight that's supporting the index, and Reliance Industries comes back to save the day. If not for Reliance Industries and some of the other larger names, the HDFC twins and ICICI Bank and all of the other names would have really dragged the index far lower in the session. But the broader market space, and to take you through that as well, the mid-tier and the small-tier basket mid-caps are down about 1.22%. So there is a tinge of underperformance that's come into today's trade. However, a few stocks that are doing well include the likes of SAIL, which is up 5.5%, SRF, Escorts is up 5%, Graphite India is up about 3.5%, and TVS Motors gains 3%. What's losing heavy is AU Small Finance Bank, it's down 10%. Future Retail is down about 9%. You had the group raising about $500 million through USD bonds in January at a coupon rate of 5.6%. That bond now trades with yields of 11.3%. So it's giving you a slight edgy picture with regards to the future group as well, because you've seen these stocks correct massively. Muthoot is down. It's down 7.5%. Bangalore Refinery is down 5.5%. Coming down to the small cap space, a few stocks there. Lakshmi Machine Works is up 9%. Wellspun India is up 20%. Dish TV and India Cement continues to do well. Remember, we've got Radhakrishnan Advani increasing its stake in the fortnight from 12% to 16%. Just Dial continues to reel under pressure. Remember, heavily owned by FII. So obviously, if you see FIIs pulling out money, they're going to be pulling out money from the stocks that they own in a big way. Wenky's, Delta Corp, Cyan, DCB Bank are some of the other bigger losers. But let's take it down to the F&O space. We've not really been seeing too much of volume activity over the last few days in this correction. Makes you wonder whether this is a bit shallow in nature. But Agam joins in to give us a better perspective. Agam, good afternoon.
Good afternoon, Devina. And you do make a very important point right now, considering we are not looking at a significant change as far as your futures and options volumes are concerned. Today, we are looking at marginal gains for the indices, which will include the Nifty, but the open interest is up around 1.6%. Do remember there are in fact a lot of shorts into the system, and it may take a while before we start seeing unwinding in them, which is why we are not seeing that indication as far as the open interest is concerned. We're not seeing that decline, so there's no short covering just yet. The Nifty Bank, which is down 1.7%, is seeing more increase in OI downwards. When it comes to the Wix, that is also at heady levels at an 11-year high, and today it's comfortably above the mark of 60, and it stays there. And this is despite the fact that we've seen the indices remain marginally in the green, around flattish for now. There is a lot of change in OI around the 9,000 mark. We're seeing a lot of writing around the 9,000 put for now, as well as the call, but it's anybody's guess as to where we're heading, and we certainly can't, remove a trend as far as your open interest is concerned in options. But let's move on and talk about so that's your open interest distribution, and we are only seeing puts in terms of activity and nothing else. But to talk about stocks, we have the entertainment, which is under more pressures, down 15%. There's a lot of selling there. In terms of those stocks which are gaining, that are advancing, we do have some of them which are up and about. So the next stock should come up for you on your screen as well, and that should be TVS Motor Company, which is gaining. The other company which is also looking at fresh buying is Escorts. So two stocks from the auto sector looking at a little bit of rebound, but there is also weakness in Just Dial, which is also down 10% and now inching towards the mark of 300 rupees a share. An open interest increase of around 8%. On the whole, a mixed day of trade, but we aren't ruling out more volatility, considering the Wix is already up another 2 to 3% for now.
Right, Agam. Thanks very much for that. And the Wix, as Agam highlighted, at about 61 now. Its peak around the global financial crisis was about 85.13. It's not there yet, but symptoms are such that there is a possibility that we could see this volatility spike if things don't fall into place anytime soon, and if the issues worsen around coronavirus. Just want to look at the fund flow activity as well. The foreign institutional investors have been selling, and they've been selling big time. Look at the numbers that we've seen starting March 4th. On a daily basis, they've been net sellers. The big number that came in yesterday's sell-off was about 3,089. An even bigger number, closer to $1 billion, was on March 13th, on Friday, when they sold closer to 6,028 odd crores. And almost on a daily basis, they've been selling 3,500 odd crores. So they're moving out in a big way, which also gets covered up. And the interesting part is that you've always seen this divergence between FIIs and DIIs, and DIIs have always tended to come in at a time when the FIIs have started to sell. So DIIs, in a way, trying to match up to the sell-off that we're seeing from the FII community. However, in today's session, it looks like a silent day of trade. If we were just to look at the final print right now, that's 9,088, which is absolutely flat with no regards to the volatility intraday. But let's bring in our experts on the show as well to talk us through what they believe could be the trade looking going forward. Amar Singh of Angel Broking, he's joining us right now on the show. Along with him, Sachidanand Tekar of Trade Bulls. Good afternoon to you, gentlemen. Thanks very much for taking out the time and joining in. I'll start off with you, Amar Singh. 9,000 obviously is the bigger support level that everyone has been watching out for, and if we hold on to those levels, then probably we are in a safer territory. But is there any trade that you would like to initiate right now?
Yeah, I would say that looking at Nifty, what we are seeing is that definitely any trade that is more likely to be in favor of the odds is on the short side, because what we are seeing is Nifty is unable to sustain above the 9,400 mark. So there is a selling opportunity when Nifty moves towards 9,370, 380 levels. And also on the downside, what we see is that crucial support is somewhere around the psychological mark of 9,000. But below that, that is the low that was made on 13 March last Friday. That's something which is very crucial. I would say that that is actually a very crucial support zone. So that's relatively lower at around 8,000, 8,550, 8,500, 600 zone. So that's a very strong support zone. And technically, if you look at the charts, be it the weekly charts or the daily charts, or I would say even the monthly charts, clearly shows that if the market does pull back, again there'll be selling pressure, there'll be short selling that will be happening in the markets, and it will be more of a choppy trading session, but higher levels being sold into is what is likely to be a better approach.
Okay. Sachidanand, what's your thought? How do you approach trade today?
Good afternoon, Neeraj.
Good afternoon.
We have been seeing a very shallow activity in terms of volumes, and if you look at price, it has really not gone anywhere. Volatility has been there, and it is we are just accounting for that, and we expect that could be there for next couple of days more. But probably if you look at the entire scheme of things, we are sensing more signs of support getting built up. Even on the trading side. So 9,000 to 9,500 is the band that we are looking at, and probably we are expecting that again we may see a rebound towards this particular higher end, which is placed at around 9,500 in the next couple of trading sessions. So we are clearly setting the trading floor on the positive side. So as of now, I think the best route is to trade this particular move via options, and though the premiums are higher, but if you look at some of the data which is placed, I think 9,300 seems to be an apt option, which should be considered for trading on the positive side. So we are expecting that this move can unfold right up to say 9,400, 9,500. So we are just taking a bullish tone for next couple of trading sessions. So ideally, 9,300 call option is something that we are recommending. 90 should be the stop loss for the trade, and around 300 is the expectation.
All right, that is the call coming in from Sachidanand on the index. Michael Avery of Rabobank is also joining us, will be joining us rather, in a bit from now to give us his perspective and his take on global equities and more. Mridul Jalan of Sonora Advisors, in the meantime, is already here with us to run us through his views on the Indian equities and whether or not there are any value buys. Is it time to find a little bit of greed in this fearful environment? Mridul, what are you recommending?
So first of all, good afternoon. Thanks. What we are recommending is something which is not easy to do, which is to keep buying slowly over in this carnage. What we are seeing currently across asset classes, across markets, according to us, is we have termed this called fear of survival. What we are seeing across the globe is among investors, among individuals, are whether they will survive this coronavirus attack. This in itself created a carnage across equities and then across asset classes. Because of this fear, along with the impact on the economy, there is a risk off, and that risk off is in the mind and the portfolios of individuals and institutions. As a result, what becomes a value buy is still a value buy and will be a value buy even 10% higher or lower, but nobody is ready to take that decision. So for us, it's very simple. Keep buying slowly with your idle capital for the long term, because Once the dust settles, once this volatility stops, you will not get these prices. So you need to invest slowly is the view which we have for our clients.
Which pockets are you most keen on investing in, Mridul? I mean, lots of commentary on making watch lists and having names that were earlier a little unaffordable on that watch list and therefore making staggered investments in them. What makes your list?
So our list predominantly remains large cap quality companies with steady business and a strong balance sheet. Some of the names which were not visible for us at earlier times that now comes in our radar, the tops the list is Maruti. The reason is whatever we feel, while it's literally impossible to predict corona, when will corona impact go away,
Right.
but one thing is sure that while there may be a determined demand of auto, but the auto demands will not
Sure.
become zero.
Got
What
it.
people are
Okay.
doing is buying now, but they will buy after a period of time.
After a period of time. Okay, Mridul, hold on to that thought, but because we just need to get in a global opinion simply because there's lots happening across the world as well. And we just got through the line of Michael Every, so just want to get a couple of questions in with him. Michael, good having you. Thanks for joining in. Volatility is the name of the game right now. I mean, forget equities which are seeing this. I think somebody just tweeted out how the Euro USD basis swaps as well are really moving along very well in a very volatile fashion. You had kind of predicted this about a month and a half ago when we spoke. What's your sense now that we've seen a bit of carnage already?
Well, I think we've got much more of this to come. The market is only just beginning to realize that the previously happy paradigm that we lived within, where fundamentals didn't really matter because central banks were always there with buckets of liquidity, has completely and irrevocably changed, or at least as far as the eye can see. And there is no one to save us this time. Now, for individual firms, of course, there are worries about credit quality. You've got basically a flight to quality when people don't know what quality is. And you're seeing on a very basic level that even the largest companies in the world only want to have US dollar cash. So this is basically a global health crisis, a global economic crisis, and a brewing global financial crisis all in one. And I don't see who's going to save us from it.
Michael, good afternoon to you. With, obviously interest rates now in the range of nil, do you feel then that leaves open on the table investment opportunities where, dividend yield investments will start to take more favor?
No, not in the slightest. Why should it? I mean, on one level, you can say interest rates are low, so therefore stock prices should be almost infinity, which I think is what you were implying. But where's the value in the stock when you're supposed to be pricing it against its future current earnings when you don't know if there will ever be any earnings? You know, if you're a company that produces good X and you can't sell it because everyone's at home or dead, or your supply chain is irrevocably ruptured, well, where's the value in that particular stock? You know, what do these have? Nobody knows. Maybe they'll be okay again in a few months. Maybe they'll be better in a few months. Maybe they'll never recover and the company is functionally bankrupt already. We just don't know. And in that level of uncertainty, yeah, if you want to dive in, maybe you'll hit a few winners, but you have to lose your shirt as well. And you see it being reflected in the global stock market where we go up 10% and then we go down 13%. And then this morning, US futures opening up, and then come all the way back down again. I wouldn't be surprised if they're not in the red by the time the market actually opens. People are realizing that there's there are no guaranteed puts here from central banks anymore. So you have to assume all that risk yourself. And when you do, guess what? People aren't so brave.
Well, according to you, at this point, what is the narrative that's coming out with regards to an investment opportunity, whether it be in any asset class?
Well, it's been a great opportunity to buy government bonds for the past couple of months. You know, those years have come screening in. The two things that pipelines for years are US dollars and US treasuries. And anyone who's done that has made a lot of money. Thank you very much. Anything else, really, throw a dart out of board, because the only thing that's going to structurally change the paradigm we're in now for all of us is a virus cure or a virus solution. If we find a solution to the virus, great. We can return to the happy paradigm that we were in previously with all its inherent problems. If we don't find that, or until we find that, we're in this world of uncertainty. And I think the most important message here, for people who are listening, is to recognize these are not markets as normal anymore. These are not economies as normal anymore. This is going to become a quasi-war economy and quasi-war market. And during those particular periods of turbulence, normal trading is not what we should expect.
Just wondering, 2008, 2009, which is the last global parallel that people draw to, and even though it is different, but people gained when they bought, not necessarily at the point of maximum pessimism, but in the range of maximum pessimism. Do you think we are there yet when it comes to this? Is it possible to predict that, or would you not dare to second guess that right now?
No, I would happily second guess it. We're nowhere near there. We're nowhere near there. Because in 2008, 2009, all you needed was central banks to say whatever it takes. And therefore, the liquidity taps were opened, and everybody was made whole, nobody lost anything. All good. You know, it was a Msme moment, a credit heart attack. They just needed a bailout, and everything could proceed. We had a brief recession, very deep, and then we bounced back again quite strongly, of course. Unfairly, very, very bad structural side effects because of the austerity that was ridiculously imposed in the West afterwards, but we recovered quite quickly.
All right.
But you don't...
I mean, here's the key question. What's the level of interest rate that will incentivize you to go to a cinema and have a meal out with your family when you might die doing it? That's the key question. You tell me what level of interest rate says to you, yep, I want to go and see a movie tonight and then go and have a drink and a meal with my friends and then go to a shopping centre when you know that I could potentially meet the death of you or someone you love.
No, I agree.
And if you can ask me that question, then you can tell when we've reached the correct level of interest rate.
No, I agree that interest rates will not necessarily solve this problem. But the one question that I would want to ask you is that asset prices deflate up to a particular level, thinking or trying to estimate the impact that such a move can have. I'm guessing what you're trying to say is that as of now, it is difficult to say whether asset prices, or rather you are saying that it's easy to say that asset prices have not priced in the impact of this.
Well, look, put it like this. I'm not an equity analyst. I want to make that abundantly clear.
Yeah, agree completely. But I'm just saying different asset classes.
And I'm not giving any recommendations there. Okay, but I presume we're talking equities more than anything else. Implied in that question. We are still at the moment only just in a bear market, which used to be normal even during healthy times. Occasionally, you would have a bear market, and we're still only just over 20% off of record highs. So. In some markets it's looking worse than that now. I mean, you may be down a third. But if we're really, truly heading for a global recession, which absolutely appears to be baked into the case now as far as we can see, and if that's going to last, how long? 6 months, 9 months, 12 months, 18 months? I suggest until we find a virus solution, that's going to be the reality of the situation. How can we only now say, we're off of the top, the all-time top is fair level? It still strikes me as being incredibly over-optimistic. There are so many companies that may be trading at beaten down prices, but if you actually look at the business model, maybe it no longer exists.
Right. Getting your point there, Michael, and it was great chatting with you this afternoon. Thank you so much for taking out the time and speaking with us, making very pertinent points out there. And it's difficult to gauge whether this pessimism has reached its pinnacle or not. There's still that level of uncertainty around how widespread this thing could get. Remember, we ourselves here in India are in a very crucial position. We've got about 120 infected cases, and moving from 100 to 1,000 takes a matter of a few days. So we ourselves in a very critical spot. Let's talk about the industry then, and how the various industries are coping with the spread of the coronavirus. Anil Agarwal, Executive Chairman of Vedanta Group, he's joining us right now on the phone line from London. Mr. Agarwal, thanks very much for taking out the time and speaking to BloombergQuint. Let's look at your assessment and what does this mean for your industry?
Yeah, definitely. We are most of our industry is in India. India, if you see that all the other mining and oil company, they are doing their business on the basis of export to other country, as well as to the China, and they are really in difficult. But as far as India is concerned, India is in a position where they have their home consumption, and we are not producing enough. So enough, so they're dependent on the imports. So Indian industry in India for the basic raw material, basic commodity will be okay, where there is a mining processing, and we have all the processing downstream in India, so it should be okay. So we have a little bit an advantage position. As far as the world is concerned, we see the Prime Minister Boris Johnson said yesterday that there will be death of 250,000 people. He's bringing all the regulation. I can see in London completely the city, the streets are empty, the stores are empty. So people are composed, and so nobody knows what is it. Nobody knows, and the big leaders are coming forward, and they have been proactive to say everybody to remain calm, to keep wash your hands. So this is what is going on. So let's wait and watch. But as far as our industry is concerned,
Sure.
General industry, the other thing which I look at in India, the biggest advantage is, one of the advantages, I'm always optimistic that we used to import so much from China,
Yeah.
including the furniture, including the toys, all small things, religious, all will be start manufacturing in India. Because we have the capability, government is very keen.
Sure.
So there is a end of the tunnel. There is a different outlook. The
Right,
other
sir.
thing which I'm looking at for Indian perspective on the buyback. Buyback must be encouraged. There is a huge tax on the buyback of 22%. We should nowhere in the world that the buyback tax is there.
So you're suggesting
I
it should be
urge the
brought
government
down.
immediately. Yeah.
Okay, sir.
Yeah.
Sir, good afternoon, Neeraj, or rather good morning to you in London. Just
Yes.
wondering, is it possible to predict the extent of damage that could come in on the commodity space over the course of the next 2 or 3 months? Or when would any possible revival happen now that China is limping back to normalcy?
At the moment, I see about two things. We are looking well. Overall, if you see, there is definitely a slowdown in the commodity market. If you look at India, I don't see anything to slow down as far as the commodity is concerned. So there are two different things. Overseas, the impact is at least 10 to 15% at this point of time, and can be more. It can be more, but because of the shipping, because of the various rule and regulation. But as far as the India is concerned, I can see people are very cautious. But the demand is so high because there will be less import. So in Indian industry will be okay.
Okay. Is that what you're saying? You don't feel the demand at this point seems to be a bit fragile? And what does that do in terms of pricing vulnerabilities?
Yes. So again, two things. Oil price has dropped almost 50%. Other commodities has dropped 10 to 15%. Copper, aluminum, zinc, iron ore, 15%. So that has a huge impact. But oil has the biggest impact. So again, in the world market, because of the war between Russia and America and the Saudis, this impact has happened. This is a huge benefit for India because so much we have a biggest import bill is the oil, and which will come down to almost 50%. And I hope this money should be used in a proper, not in deficit, but reserved for the development of India or whatever it works. So, but that is one advantage as far as India is concerned. But the oil price in the world has come down. I believe that the oil price will come up $10 in very short time. Other commodities, as I said, is a 15% down.
Right. Mr. Agarwal, there are concerns that, obviously now there's going to be a big hit on the volumes for the industry. But at the same time, there's going to be some cushioning on the margins because of the prices of raw materials coming off. And that will help earnings, scrape through, and probably mid-21 is when you see the turn of the cycle for the industry. Do you feel that could be the case?
Yeah, my belief is 30% of company will shut down. 30% of the company will shut down. And the other company who has a strategic position will be stronger. And they will bounce back, as you said. They will to hold on this 1 year, and they will come back. They will come back. But I'm 100%. My feeling is that the 30%, 40% company will shut down.
This is something that you're talking about from your industry standpoint, or just generally you're saying?
I'm talking my industry point,
Okay.
commodity side.
Okay.
Other industry, I don't have a view, but generally, the whole thing is that the people fittest to survive, which all we have always said, people who believe today's technology, who can survive, because thing is, what I'm here from nobody knows again, but what we see in the newspaper, somebody talk about this is a pralay, and we have always said that India probably have a better position because our food habits are little different. We are more cultural. We are different as far as our air, water is concerned. We have a more sun than anywhere else. So these things I'm again optimistic. I'm Indian. I'm very proud. So I believe that India may have a better situation than the others.
Well, one certainly hopes so. Mr. Agarwal, one final question. Lots of global central bank action happening, etc. And commodities are moving and currencies are moving around thick and fast too. Any large impact that you think would come in your companies in the quarter gone by because of not the business impact, but the add-on impacts due to currency or crude or otherwise?
And just to add to that, Mr. Agarwal, will you be able to give us a rough estimate in terms of how growth for your companies would get impacted because of this situation?
Yeah, sure. But see, I will give you the whole idea about my company. We produce, as you know, zinc, silver, copper, aluminum, oil, iron ore, and steel. And these are our 6-7 sectors. And we will have a revenue of $16 billion, and we'll have a profit this year, $3.3 billion by March end. And total debt in the company is $10 billion, which is very comfortable. So this is our position. The prices of oil has come down. Our plan was to make oil, double our production in the oil, which we are not stopping. We are looking all our capex. Our cost of production of oil will be around $7. All in, including interest and the capex, will be $20. So we're still better off. And India has to produce oil. A country will be very vulnerable if we don't produce our oil, because what can happen in the water, we don't know. We are three-side sea. We are connected with all this Middle East. So we have to produce oil. So any large country must produce at least 30% of the oil. At the moment, I'm the only producer of oil in the country apart from the government. So, but very excited, very, very excited. Definitely impact has come. So what we are doing, we are holding our margin, and we are going back to reshape how down the line we can cut the cost. And everybody is coming forward, cutting the cost and buying the raw material, logistics, improving our efficiency, and we want to hold on to our margin. We are looking next year our EBITDA to be $5 billion and the volume about $22 billion. So this is how we are estimating, and we step by step we are moving. But we are in India much better than anywhere in the world.
Hopefully it turns out even better than what you're thinking. Mr. Agarwal, thanks so much for joining us with that perspective.
Thank you. Thank you very much.
As the Executive Chairman of Vedanta. Well, we were trying to see if there was some estimate about the demand destruction or the damage that would have happened comes out, but I think it's difficult for companies also to do that. But nevertheless, we tried, and these were his answers. Midul, sorry I had to cut you, and then we want to get back to Sachidanand and Amar as well, but you just heard one of the principal commodity producers talk about this. A lot of estimates about how companies on a cost curve basis are trading substantially lower than what they've done in the worst of times. Would commodities be bets that you would even think of taking right now? Commodity companies, that is.
As a policy, we don't invest in commodities.
Okay, you won't.
Because of the fact that there is a huge operating leverage, which means scenarios like this, when there is a sudden demand destruction, they are not able to manage their cost because the cost is quite fixed in the nature. So while Mr. Agarwal pitched the right points, my concern as an equity investor will be that, say, if your demand is gone for a quarter, your revenue is served off for a quarter, your cost remains there, which means there's a huge erosion of equity, and your debt equity, what you are talking about, goes for a toss, which is what worries in equity investors, and which is why what we are looking for is more of companies where the demand destruction, even though they're only for a quarter, they are able to manage because of the lower cost. And that is where the demands will come back because those companies will have healthy balance sheets to take care of it. So commodities is still an avoid for us.
By the way, the markets are now trading at the lowest point of the day, and banks are the one which are taking it on the chin. So Sachidanand, I would want to come back to you first. 800 points low for the Nifty Bank right now. It's trading at the lowest point of the day. How weak do the charts look? Do they tempt you to take fresh trades?
Well, on the indices, I would rather refrain. But if you look at some of the stock-specific movements, then definitely, from the banking space, RBL is still on the weaker side. So some trades, stock-specific, should be deployed on the short side. So RBL Bank is something that has been on the weaker side, and still the data continues to be weak. So probably rather than trading the index, I would trade this particular move via the stocks. So the stop loss for the trade should be placed at 165. I think it is in a sweet zone of 160, 162, where short positions should be created. Overall, we're expecting that this move should extend towards say 150, 145 kind of a zone. So probably from the banking space, I think RBL Bank can be shorted.
Right, RBL Bank is probably the lone stander in the green this afternoon. So up about.
You're forgetting Yes Bank.
And yes, Yes Bank has its own story to tell. I'm not even classifying it with the rest of the group, but that stock obviously, what a journey this one's had. But we've broken down below 9,000 now for the Nifty 50 at 8,982, and this is happening at a very rapid pace. 2.33% given up for the Nifty 50. It's just a sort of a free fall that we're seeing right now on the Nifty, and that's also because of the Nifty Bank, which is now down closer to 900 odd points. A quick glance to see if there's any deterioration in Europe which has led to this fall. I want to look at FTSE CAC and DAX, and then the futures. So we've got a dip of about 1.6% on the CAC. The DAX is also down 1.6% and a 2% drop on FTSE 100. Dow futures also, which were up 1.5% when we started the show, have given up all of their gains. That's about 20,419. But moving along, the spread of coronavirus and the resultant restrictions have prompted the Indian Banks Association to approach the RBI. Bankers have told BloombergQuint that the association wants some relief from the regulator on some of the loans that stand the chance of turning into NPAs. Vishwanathan Nair joins us right now for more details on the story. Vishy, over to you.
So, as you said correctly, the Indian Banks Association has decided to approach the RBI for some kind of special dispensation in this matter. Essentially, they're focusing on MSME as well as some mid-corporate loans. The idea being that you give these borrowers about 3 to 6 months of extra time because of the coronavirus, there has been considerable disruption in their business, and their ability to repay those loans have come under question. So now, at this point in time, the Indian Banks Association is drafting the proposal. It will then approach the RBI, and hopefully the RBI will give a nod. Now remember that already the RBI has given some level of forbearance for MSME loans, which first came out in January 2019, which was supposed to complete or end in March 2020, but then later the RBI extended it to December. Essentially, this is for MSMEs which have loans up to 25 crore who are GST registered and were not NPAs as of January 1st. So essentially, these companies can get restructured. But the current proposal is for accounts that do not qualify for that or are not part of that entire restructuring scheme, but still need some immediate help, even if it is for the short term. So hopefully, if the RBI approves it, then the banks can give these companies about 3 to 6 months to repay their loan and not be classified as NPAs.
Well, let's wait and watch if some of these demands get accepted. Vishy, thanks so much for joining us with those details. But banks are clearly the softer spot right now. And before we get in the final comment from Mridul Jalan, Amar Singh, I want to come to you on the Bank Nifty or individual banking components. Sachidanandu chose a banking name as the weakest shorting idea. What about you, the Bank Nifty or any of the individual banks? What looks weak right now? Is there a trade?
Looking at the indices, yes, definitely Bank Nifty continues to trade extensively. It's weakened and it's breached the recent lows. So clearly reflecting that there is more on the sell side. And as we speak, Bank Nifty is corrected by almost 200 points. So I wouldn't recommend going short at these levels. I had spoken earlier that higher levels should definitely be looked at shorting and one should avoid buying.
I think ICICI Bank is now down 10%. Should pull up the MRR function of the Nifty Bank to show you the kind of damage that's been done across the board. That's just, it's just off the grid right now for ICICI Bank. It's down a good 38 odd points. And this was a level that we probably saw 6 months ago on ICICI Bank. And from there it moved up to 500 plus levels. 40 million.
In a strange side of way, and we'll get in Mridul's view and Dharmesh Khan's view on this, but ICICI was at 400. Yes Bank was at about 70 when the problems for Yes Bank started. Yes Bank dipped all the way to 6. ICICI Bank went up to 550. And now ICICI Bank is to 365. And Yes Bank is back to about 58, 60 odd levels. It's just the weird ways in which some of the stocks move. But Mridul, before we thank you, ICICI Bank, this correction that we're seeing, this is the MRR function. It shows what's happening to the banking stocks. So Yes Bank and Bank of Baroda and RBL Bank, the three ranges of stocks. But Mridul, before we thank you, ICICI Bank, this destruction in demand, it is touted by the sell side as one of the most lucrative banking stocks to invest in. Would you use these dips? Would this be amongst the top ideas in the banking space? I'm asking you.
Definitely, yes. What you are seeing on the price side is because it was the most over-owned bank, because it was the top idea, and hence when people run for liquidity, they have to sell their portfolio. Unfortunately, in Indian market, broadly, the traders works on borrowed capital, which means when you have losses there or when you want to cut down on your position and pay for the end-to-end, you have to sell keep the best of the stocks, the blue chips. And which is why this last leg of fall, what you are seeing is across Bajaj Finance, HDFC Bank, ICICI Bank, because these are the best of the holdings which people had. So it's an opportunity for investor to add. I am firmly sure in the moment fear recedes, we will not get these at these prices.
Okay, Mridul, we'll leave it at that. Thanks much for taking the time out and speaking to us today. Really appreciate your time. That's the view from Mridul Jalan. Try and get in Dharmesh Khan's view as well. Dharmesh, can I ask you about Tata Motors first, or can I ask you about the banking stocks, the kind of correction that we've seen in some of the banking names?
Yeah, I think this is more to do with some liquidation kind of a selling of margin call. And my own sense is that it's more to do with ETF money, which is being, liquidated, because this kind of a 10% down on ICICI Bank and the selling is aggregated. It's not from an HNI or retail side. It has to be through institutions and that to foreign institutions, because when they place orders, it's a blanket sell or a blanket buy. They don't look at VWAP or the weighted average pricing mechanism. I have dealt with them earlier, so this is what I can say there. Times are tough. Uncertain times. We just don't know how the things are going to pan out. Fear and panic has taken over everything, and liquidation is the thing which is happening. Earlier, it was liquidity which was filling the market up, and now it is liquidation which is getting the market massacred. So one has to bear with time.
This is pretty similar to actually what we saw on Friday when the markets hit lower circuit, especially on counters like Kotak Mahindra Bank, which fell 20% for no apparent reason. Why would Kotak Mahindra Bank fall 20%? But obviously, you had a whole gamut of stocks which suddenly collapsed, and you saw way much lower prices on them. But nonetheless, we're still on the brink of even breaking 8,900 now on the Nifty. It's at 8930. We still have another 15 minutes left to go. You really would have hoped at this point that it speeds up in terms of the passage of time. We don't need to see the kind of closes that we would have anticipated. Remember, a lot of technical experts, and I want to actually go back to Amar Singh. Amar Singh, how crucial is 9,000 as a level on a closing basis?
I would say 9,000 is definitely a psychological level, but I would give more importance to the low that was made on Friday. So I would give that more importance because that's a very crucial support zone of 8,500 and 600 zone, say roughly around 8,550. Because on the long-term charts, if you look at the on the yearly charts also, that comes around as a major support zone. So Friday's low is very important, but at the same time, if you look at the major indicators on the short term as well as the intermediate term trend, they clearly show that there is more on the downside and higher levels will definitely be sold into, and we'll have volatile trading sessions at least for next couple of weeks. So one needs to be prepared for that, but at the same time, last Friday's low is definitely something which needs to be watched out for.
Well, yep, but banks, and we are very close to now breaking 22,000 on the Nifty Bank. That's the other key thing that you got to monitor. From the levels that banks were at, I think these stocks have come off, and mind you, this comes off, I think as Dharmesh Khan mentioned, this happens when it's not just the lightweight, weaker banks which are correcting, but serious selling happening in the heavyweight banks. 10% now for ICICI Bank from the highs, and which is pretty steep. But look at that, off day's highs, 10% for ICICI Bank. Yes, bank has corrected a bit from the highs, but it's still in the green. Axis Bank at 485, sub 500. At 750 was the time when everybody was coming out and saying that it's a bank which has got the HDFC Bank employees and therefore it'll do well. It's lost 35% as Axis Bank from its recent highs. That's the extent of the correction that has happened into some of this. Into some of these names. Dharmesh, it's a bit of a repeat question, but I'm still asking you again. Would you go in, first, would you go into some of the banking names because of the damage that has been done? Because not every banking name will have NPAs which won't be so high. Some of these will fare better than the others. And if so, would you choose the top quality ones that people spoke about, which is Kotak and HDFC Bank? Would you go in for the ICICI, Axis? I'm leaving out IndusInd Bank right now, so ICICI and Axis. Or would you go in for some of the smaller ones, the DCBs, Federals, etc.?
See, on the contrary, in Village today morning, I released a report where, a few ideas were discussed to be bought into in a staggered manner. And there, I think public sector banks is the one which I look forward to. Like I have suggested a buy on Canara Bank. If you look at this year's numbers for the past 3 quarters, they have done fairly reasonably well as far as asset quality is concerned. And I think the type of price correction which has happened there is humongous. At the same time, see, one thing, I don't know whether I should be saying this, but all these public sector banks have a backing of government. So that's the thing which is ruling the theme as of now, because private sector banks, you don't know what kind of animal may still be lying there hidden, and if it comes out, or what kind of a damage it can do. But as far as public sector banks are concerned, at least equity infusion through government will be there. So in a strategically speaking, that looks to be a much safer bet. And if you look at today's market itself, Canara Bank is trading in green as of now. At the same time, I can see even Bank of Baroda is trading in green. So these are the opportunities which you should be looking into. At the same time, they are not overowned. In fact, they are underowned now. Nobody has them in their portfolio. So if the buying comes back, they can give you a very good returns. At 0.3 times price to book, with asset quality improving and equity infusions through the government, it's very hard that you can go wrong on that. So it's time to look at cyclicals and public sector banks other than private sector banks at the present moment.
I just want to look at Maruti. It's up about 2% right now. Stocks at 55.76, and just a few days ago there were concerns on at the dealer level with regards to BS4 models still being in inventory, let alone BS6. So they've not been able to push out BS4 models yet. But our conversations with Mr. Bhargava suggested, and he categorically stated that that's not an issue for Maruti Suzuki. He said that Maruti has no issues. In fact, they are out of BS4 models completely. There's no inventory stuck at the dealer level for BS4 models, and they've got much of the BS6 inventory as well going in. So Maruti seems to be pretty okay on that front at least. 55.77 holding steady ground in today's session. Icici Motors too, that's up about 4% So you're seeing some interest coming about. Hero MotoCorp is up 2.8%. And I just want to look at Nifty Auto Index. So I think that's probably one of the indices along with Pharma that are okay in today's session. Nifty Auto Index just slumped a little bit, a bit over the last few minutes. The graph is pretty similar. Pharma is probably the one in the green. Cipla is up. Then you've got the likes of Sun Pharma, which is up in the green, and the smaller names which are holding ground as well. Asian Paints up 2.5%. A quick call, Sachidanand, on Asian Paints.
Well, right now, again, a very similar formation wherein the stock seems to be locked in a particular range. On the higher side, until unless we don't see a closing above say 1750, probably we may not see a direction move on the long side. But even on the declining side, I think the support which has been created around 1660, 1650. I think this particular support should hold. So probably we may see more of consolidation within this particular range. But definitely, one should not short this particular counter at this point of time and wait for lower levels to so that a mean revision play can be initiated. But I think on the lower side, anywhere close to 1660, 1680 would be a good place wherein the stock should be bought.
Okay. Well, everybody's talking about how supply chains are getting disrupted due to the coronavirus outbreak. And while it's still hard to quantify the impact, JM Financial has done a ground check to find out how some of these industries are working around. Samit Sarkar is here with what the report entails. Samit.
So JM Financial sometime back came out with this note where they had pointed out the sectors that could face supply side issues in the factories in China do not resume operations. Now, as China is getting back to work after the lockdown, let's see what has been the impact on this key sector. Now, this is completely based on JM Financial report based on their channel checks. Now, in chemical sector, prices of fluorspar has increased by nearly 20% in the past 2 weeks as the stocks are very low, while prices of some basic chemicals like acetone has seen a drop of nearly 10 to 15%, also due to lower crude prices. For the pharma sector, manufacturing of APIs have resumed in affected regions of China, but fewer workers are reporting to work, and as a reason the utilization levels are still low. Also, companies are yet to receive incremental supplies from China. Now, according to the report, Drug Controller General of India has reached out to pharma companies in China to extend logistics supports to airlift APIs from China, and Cipla is known to have sought this DGCI support. In auto sector, the companies are not anticipating major impact on production till the end of March 2020, and supplies from China have now resumed as supplies plant are back online but at lower capacity utilization. In case of critical components, companies like JLR and Bajaj Auto are airlifting the components, while Maruti on the other hand is closely monitoring situations in Italy as certain CNG related parts are sourced from Italy. In industrial sector, for the ACs, most supplies are likely to be normalized from April 2020, but for bearings, supplies from Europe have seen a disruption according to the report. And lastly, for the textile sector, supply from China to the US have seemed to be back to normal. And if you see in February and March 2020, some strong home textile demand in US was seen due to higher than average stocking by global retailers. Now, this demand is likely to taper off starting from the second quarter of calendar year 2020. So, no major benefit coming in from for the Indian textile exporters.
Okay. Sumit, thanks so much for putting that into perspective. The question is how much of this will hold true over the course of the next few days as maybe more and more chains get disrupted. Let's get in closing strategies first before we talk more. Amar Singh, do you have one?
Yeah, I would say it's a short on DLF. DLF is a stock, if you look at it, it continues to grind lower, and technically it continues to be negative on the charts. So DLF can be a sell. And if you look at the levels somewhere around any pullback towards 148, 150 levels can be used as a shorting opportunity with a stop loss of 155 and a target of 139 on the downside.
Okay. Sachidanand, I know you just gave a call on Asian, but what's the top closing strategy?
Well, we are looking for some buying opportunities, and I think DMart is one particular counter wherein it has come down, during the day. But if you look at the formation, again, we saw an engulfing bullish kind of formation near its 200-day exponential moving average. The stock is quoting somewhere close to 2000 levels. So, keeping a stop loss at 1970, some longs should be added here. From a trading perspective, the stop loss should be on a closing basis, but we are expecting that the stock could see a rebound soon, and probably we may see levels close to around 2340 on a positional basis. So this is one particular counter which can be accumulated during this high volatile environment in the market. But from a trading perspective, 1970 should be the stop loss.
How many supermarts buy 2004? It's holding out in a scenario like this, but a clutch of other names not looking all that great. Just wondering, with the Bank Nifty doing what are stocks like Piramal Enterprises, etc. up to right now? Just bring that stock up. It was trading at the lowest point of the day yesterday, 52-week lows. For now, it went up in the green, but has come off quite rapidly. So looking slightly weak. These are weaker names which have bounced back today. And correcting yet again. We've been, Dharmesh, very quickly, we've been talking about stocks that you should buy. I want to ask you, a lot of people have investments in a RBL Bank, IndusInd Bank, Piramal. If you had these stocks in your portfolio, and it's okay to have them because they've been quality names in the past, maybe some of them could be quality in the future as well. Right now, they're caught in a bit of a spot of bother. But if you had them in your portfolio, what do you get out of them?
No, I will definitely hold it. And as far as IndusInd Bank and RBL Bank is concerned, I will add more if I have surplus money with me.
Sorry, did you say you will add IndusInd and RBL Bank if you had surplus money with you?
Yes, definitely yes.
Okay. What about Z, Dharmesh? It's down 19% at 133 rupees.
Yeah, I won't touch that.
You won't touch that. One more question on Bharti Infratel, which is now sub 200, Dharmesh.
It's a buy. Bharti Infratel should be bought into.
Bharti Infratel should be bought. Okay. And last but not the least, for somebody who got into Yes Bank thinking that let me try my luck. Okay, the luck is paid off. It's now 59% higher at 59 rupees. What do you do here?
Hold the entire quantity for next 3 years.
You hold it, you're not even asking about selling off the 25% also.
There's no sense selling the 25%. Keep the entire quantity with you.
Why?
It will pay you richly.
Why?
See, the entire, the hole which was created in Yes Bank because of the NPA issue has been addressed. So entire money has come back and the business is still there. So the only problem is what I look into Yes Bank is they should have a very effective leadership at top, and they should be able to retain all their employees who are there and who have been contributing relentlessly. So I know the working of Yes Bank closely as far as retail business is concerned. They have been doing exceedingly well. They were just stopped because of the capital thing. That has come into place, and with the insight of SBI, SDFC, Kotak of the world, it's very hard that they can go wrong. It's now completely a professionally managed kind of a bank. If you remember, if you go back to ICICI, earlier when it was not a pure bank, when it was a financial institution, something like this has happened and professionals pulled it through magically. It was a tremendous success story at that point of time. I think same is likely to be reported for Yes Bank.
Very quickly, because we have a query and I think it's a pertinent one, Dharmesh, would you buy a Bajaj Finance currently?
See, in India, domestic things have not come to a halt. Things are still working fine, and we are just fortunate and grateful to whoever is the supreme power out there. That till now nothing has gone out of hand. I think the government of India is doing a tremendous job in holding. People themselves have become very responsible. So this is just a temporary phase, because after all, your savings are getting increased, your consumer surplus is getting in your hand, and there will be a pent-up demand after a couple of months when this entire issue has been taken care of. So Bajaj Finance is a buy on every correction. All quality names. One has to just keep in mind that these are all domestic names which you have to focus on when you are buying a stock.
Okay, some points of advice. Gentlemen, stay on. We'll take in closing thoughts, but it's not ended well. Unfortunately, we had started off in the green. We're doing well. We're not ending well, and the world markets too have come off a little bit from the eyes of the day. But the banks have really come off. We now getting ready to break 22,000. We already sub 9,000 on the Nifty, and the Sensex 30,500. Low before long, we sub 30,000 as well. Bring up the mid cap and the small cap indices. I reckon they too would have corrected 3% for the small caps, 2.5% for the mid caps. Let me take you through the large caps first and how they have corrected today. Yes, and how they have done well today too. The likes of Yes Bank, etc., 59%. But Maruti, HUL, Hero MotoCorp, iShares seems like some of the autos actually had a good day. But if they did well, banks just got beaten up. One, Z is down 20%, which is a big eye-popping move on Z. But to many, it may not surprise. But look at this. IndusInd Bank, ICICI Bank, Bajaj Finserv, Bajaj Finance, Kotak Bank. That's the nature of stocks which have gone well. A lot of portfolios would have a Kotak, a Bajaj Finance and ICICI Bank, and these stocks are correcting and falling very, very strongly, and that's the worry. Bharti Infra, UPL, Tata Motors are amongst the others that have looked slightly wobbly, and now we'll get to up to speed with the mid caps as well, because that's the other pocket which has seen a lot of pain in the session today. Devina, suffice to say that there too the unraveling happened in the last 1 hour.
Yeah, Neeraj, and you know, rightly so. We've seen the collapse over the last 15-20 minutes of trade, and that's happened mainly in the financial space. And it's not just the banks, it's across the board. All NBFCs, you know, the smaller finance banks, everything gave way in the last 10-15 minutes of trade. Well, the mid caps and the small caps have ended the day lower by about 2.5%. Let's start running you through some of the names, and a few names. Vodafone Idea, after seeing a little bit of a respite over the last 2 or 3 trading sessions today, has gone down. 14% lower is where it's going to close at. Then you've got the likes of Manappuram, Muthoot. These are the names that have lost out heavily. 16% lower for Manappuram Finance. You've got others as well from the NBFC pocket that are looking weak. Aside from that, Century Textiles is down about 14.5%. That's 330 on the counter at last count. Ujjivan Financial Services, Equitas, so these are the small finance banks and the NBFCs that have lost out. IRCTC, lower circuit again for the counter. Saw a start in the positive territory, but again, by the end of the day was down and out. Equitas, like I said, 11.5%, 12% under for this one. Aside from that, some of the other smaller banks, I think Federal Bank is the other one also that's lost significant ground. Manappuram Finance, that's Magma FinCorp, which is down about 10% in today's session. Federal Bank, 8.5% given up. So the color, I mean, the market dissection is pretty clear, and where much of the damage has come in, that's been the financial space. Motherson Sumi took a knock as well today, about 8.5%. That's down in the session. Delta Corp, remember, business is shut for the company as per the Goa government notice that's come out, and therefore it's down. Tata Motors DVR, 7.5% given up. Lots of other losers, but a few handful of gainers. And the new listing yesterday, SBI Card, managed to hold steady ground today. That's up about 8% morning session. I think this is closer to the highest point of the day. And then you have a few other gains coming in to a few stocks. As you can see, it's up about 17.5% that we're talking about. Markets as a whole, Neeraj, right now, very difficult to take a call on. The start of the day could be something else, and you could be on the other side of the spectrum by the end of the day.
Yeah, and Devina, what this destruction is doing is not just disrupting the flavors of the season, but even some well-established business models. I mean, we know of marquee names who thought that the casino businesses are here to stay for a long time because it's a sunrise sector, and that stock has given up 75% of its market cap, or probably more than that, and that just speaks of some tremendous demand destruction. But yeah, I mean, when you're a stock like ICICI Bank correcting from 550 to 350, that tells you a story about what kind of wealth destruction has happened. Let's bring up the volumes today to see whether the volumes have jumped up in the session today or no. No, the cash volumes have, these are, well, higher compared to what we used to have on average in 2019. But the last few days we've had even higher volumes. Yesterday was 48,000.
Yes.
Today is 44.
You know, this talks more, this goes back to some of the points that were made earlier on, that this kind of is more on the pricing side than on the volume side. A bunch trade where you have brokers selling lock, stock and barrel in certain client accounts because they've reached the threshold. Therefore, you've got a clean book and prices that have collapsed, but they've not happened on the back of heavy volumes. And the turnover, therefore, is a reflection of that. And in the futures and options side, completely, it feels like an unleveraged market right now. No one really risking getting into the futures and options space.
Yeah, I think we just saw that impact happening on on the circuit day, Devina, wherein it happened, and we know that in certain brokerage houses, some of those leverage books got hit. But otherwise, we haven't heard of margin calls too much. This is probably, as Nirmal was saying, Nirmal Jain was saying, as Manish Chokhani was saying, maybe algo trades getting, as you said, seeing the impact. But tremendous destruction, and the contributors will show you how banks have been the lion's share, though an IT name creeps in today because Reliance is absent from this list today. But ICICI, HDFC Bank, and Infosys. Yeah,
Makes
some
you
tremendous wealth destruction.
Yeah, and these are all big names in the pocket. We've spoken
When
about
the business
how
models haven't gotten disrupted.
nothing has happened as such. I mean, and you're still talking about a growth potential of about 20% for HDFC Bank on a year-on-year basis on a CAGR 3 to 5 year. So the price destruction is questionable, but that's the nature of the market right now.
Well, final thoughts from our experts. Dharmesh, it's not just the banks. IT too is slowly and surely getting chipped off. Would you bet on a large cap IT name?
No, not on IT name. So I'm very clear about any name which you have to bet on has to be a domestic consumption name. So the stocks I can tell you which we have recommended today: Hero MotoCorp, Scott's, Godrej Consumer Product, Canara Bank, and Hindalco.
Dharmesh, leave it at that. Thanks so much for taking the time out and being with us today. I really appreciate your time. Good call on Tata Motors, by the way, a couple of months back. Amar Singh, I'll come to you. This close below 9,000, does it open up some fresh downsides, or a close below 22,000 for the Nifty Bank? Would it do that for the Nifty Bank?
I would say that definitely what we are seeing is that the market is not able to sustain. It does during the day trade higher, but it's giving up all the gains, and we've been seeing it consecutively happening. And also in the daily charts, the indicators are extremely negative. So anyways, the markets are not going to sustain. Anytime they go up, they will witness selling pressure, and also those who want to go short, they'll go short. So I would say it's a range play. And as far as Bank Nifty is concerned, somewhere on the upside, 23,000 levels. On the downside, I would say 20,500 levels. So it's going to be extremely volatile sessions going forward.
Sachidanand, what about you?
Well, I'm not really surprised by the by today's volatility. In fact, but if you look at some of the indicators, they are quoting at an extreme. We've already seen a low of around 8,555. I think that particular low, unless that particular low is not breached, probably we may see some more volatility being there. But I'm expecting that somewhere, a floor would be created in a day or so, and that's why we believe that probably market could see a U-turn in next couple of trading sessions. So rather than creating any fresh short positions, we are recommending to be very stock specific and looking at more quality. On the short side, there are certain businesses which are still weaker, and probably they can be considered. But overall, as a theme, within this volatile environment, is to accumulate good stocks. And I'm certain that probably this low that has been established on Friday, that particular low may not be breached, and probably we may see a U-turn very soon in the markets.
Okay, let's hope for that. Gentlemen, we leave it on that note. Thank you very much for joining us. Amar Singh, Sachidanand Tekar, and Ramesh Kant, thank you very much for your time. We've closed sub 9,000, but the India VIX, and that's the volatility that we've been tracking, has also seen an uptick of about 7% in today's trade. So now we're at about 63 on India VIX. That's looking quite heady at this point. But then again, you can never tell where this takes a pause.
Yeah, well, but on a fateful day wherein we've seen the markets correct yet again, it's a wrap on this leg of Countdown from Devina and me and the team that put this show together. Thank you so much for watching. Stay tuned. The market wrap comes up next.
according to a recent